Donald Trump's re-election has dramatic implications for the US economy. His economic policies are a complex blend of traditional right-wing strategies mixed with populist measures. But I'll try and keep this simple. I think there are 5 points of particular note. The first point we can note is that at the core, Trump's policies reflect a conventional, conservative approach, aimed at spurring growth through tax cuts and deregulation, but they come with significant caveats that warrant closer scrutiny and raise significant concerns, significant risks to the economy and US society. Central to Trump's economic strategy is the idea that cutting taxes and removing regulatory barriers can stimulate rapid economic growth. This aligns with the neoliberal belief that tax cuts will somehow unleash investment and create jobs, a cornerstone of right-wing economic thinking. The theory hinges on the premise that more disposable income for businesses and high-income earners will translate into broader economic benefits, a concept often called trickle-down economics. However, substantial evidence now exists suggesting that these benefits rarely materialise as intended. Tax cuts make rich people richer, but they don't stimulate the economy. On the other hand, deregulation can indeed boost economic activity, perhaps significantly by reducing the cost and complexity of doing business. But, and there's a big but, it also comes at a price. The loosening of financial and environmental regulations, for example, while fostering short-term growth, introduces significant risks. These include compromised consumer protections, potential public health threats, and heightened environmental damage. Such policies might lead to rapid economic gains, but they create vulnerabilities that may have severe long-term consequences, particularly when it comes to the climate crisis and worker rights. The second point of note is that Trump's trade policies actually mark a notable departure from standard right-wing economics, especially in his idea to increase import tariffs. Neoliberal doctrine favours free trade as a means of maximising economic efficiency and growth. But Trump's application of tariffs is more in line with populist protectionism. There are some benefits from imposing additional tariffs on imports. They might increase investment within the US. They probably bolster US negotiating power in securing advantageous trade agreements with other countries. And they may improve the security of supply chains for essential goods, especially those sourced from geopolitical rivals like China. But while these tariffs can indeed generate some strategic advantages, they come with clear drawbacks. Chief among them is the inflationary pressure caused by increased import costs, which businesses will inevitably pass on to consumers. Additionally, reduced competition due to higher tariffs may lead to inefficiencies within US industries, undermining productivity gains and ultimately affecting US economic resilience. The third point relates to the cost of living. Trump's tariff policies have a really negative impact on the cost of living, already a top concern for the US electorate. The inflationary effects of tariffs are significant in a consumer market where retailers such as Amazon and Walmart rely heavily on imported goods from countries like China. Since it's US importers that actually pay the import tariffs, these costs are naturally passed down to consumers through higher retail prices, and this is likely to disproportionately affect lower and middle-income households. Also, on the cost of living, Trump's stance on immigration poses another layer of economic complexity. The planned deportation of undocumented immigrants, who are essential to various sectors of the US labour market, risks creating labour shortages. These shortages are likely to drive up wages and subsequently operating costs for businesses, feeding into higher prices for consumers and amplifying the cost of living crisis. The fourth point concerns Trump's approach to poverty and inequality, which also follows a right-wing template that puts forward economic growth as the primary solution. The claim is that the benefits of growth will reach all levels of society, even if a bit unevenly, and that the US economic model's inherent nature includes winners and losers. However, the reality is that the US already suffers from deep-seated poverty and significant income inequality. Trump's tax cuts, while designed to promote investment, are more likely to exacerbate these divides. They're likely to lead to decreased funding for public services as the government's revenue base shrinks, pushing those reliant on such services further into hardship. Empirical data indicates that tax cuts do little to sustainably lift economic growth. What they do, however, is skew the distribution of income further towards the wealthy. They make the rich richer, amplifying social and economic disparities. Fifth and finally, environmental policy under Trump is another area where deregulation is going to play a pivotal role. The anticipated rollback of clean energy initiatives and Trump's promotion of fossil fuel extraction signals a stark shift away from global environmental goals. This approach prioritizes immediate economic gains over sustainable development, potentially leading to severe long-term consequences for climate stability and public health. The US under Trump's policies may achieve short-term prosperity, but at a substantial cost to the environment. The environmental impact, coupled with diminished regulatory oversight, suggests that any economic success under such policies would be really precarious and potentially destabilizing over the long term. Overall, Trump's economic policies may well create visible economic growth, and he would be able to leverage this as a measure of success. However, the broader implications are potentially really serious. While growth may be achieved, it's likely to come at the expense of consumer and worker protection, further environmental damage, and more poverty and inequality. The choice between short-term gains and long-term sustainability will be the critical consideration for evaluating the true impact of Trump's economic policies. Thanks for watching, and I'll see you next time.